In perhaps one of the biggest market news this year, HSBC is selling its operations in South Africa. Couple of questions that we need to answer. The first is what happened. Secondly is what is the impact on the buyer. I'll reveal the buyer, who the buyer is, and what their market presence is, what that means to HSB as a bank, and then fourth, what it means to you as an investor in such a market. Please stay tuned. This is Friday Money Matters, this Friday and every other Friday on this channel. Let's jump in. Now, what happened was HSBC has decided to move out of the South African market and sell its operations to FirstRand. Now, FirstRand is by far the largest bank in Africa as far as market value is concerned. However, we also know that HSBC is perhaps also one of the biggest banks in the world. Then the question is, why are they moving out of South Africa? We'll answer this question as we go along in the video when we talk specifically about HSBC. But however, what the move means now is that they are selling their assets, they are also selling the entire clientele base, and also this includes operations, employees, and all the other things in terms of processes that they've invested in South Africa. So as far as the buyer, which is FirstRand Bank, they are buying a system that is already existent. All right. So this might suggest that moving from HSBC into FirstRand, this will make it a more simpler and more fluid sort of transition for the operations, but we'll wait and see exactly what will happen. Another thing that we need to take note of is that the move is not yet finalized. It is expected to be finalized at least somewhere at the end of 2025, as long as the regulators agree to it. Okay, let's answer the question, what does it mean for FirstRand? For FirstRand, this could be seen as a very big move. It is a move in the positive direction. Acquiring something that is already functional and something that is productive and profitable is always the best. Now, I'm thinking that by end of 2025, the move will go through because such a move really pleases investors and all the stakeholders of FirstRand. Now, if FirstRand stakeholders agree to the move, the only reason for agreeing is that it will bring benefit to people that are already invested, shareholders, and so forth. So, like in all likelihood, the move will go through because besides just increasing the market value, you are also ensuring that the people that were employed by HSBC will be taken over. So there are no issues such as a retrenchment and so forth. Although this could happen at a very minimal level, we still have got the whole bunch of the stuff moving over from HSBC to FirstRand. Then let's answer the question, what does this mean for HSBC? Okay, first let's look at the reason. The reason why they are moving from South Africa is because they have decided to invest in other markets that seem to be profitable, and one of those regions is Asia. We have seen, especially after last week's news, where the Chinese government had a major cut down, especially in interest rates. Now, this has brought a lot of vibrancy and volatility in that particular market. We have seen a lot of interest coming back into the Chinese stock market. And previously, just before that, a particular rate cut, the Chinese market wasn't doing that well. But because of it, then there's renewed interest. Investors are pouring in money, and HSBC wants to be one of those businesses that takes advantage of such market conditions. However, I also want you to look at this from people that are already invested in HSBC. What it means for them is that this could be a very a good move. They will probably support it. Why? Because right now Asian markets are performing better than Africa, and as such, if it was to go to a vote, shareholders will definitely vote for this move, and we'll see a lot of thumbs up, especially moving forward into that period. If you're watching and you've come this far in the video, also give this video a thumbs up. Now, for investors, every investor always wants to see a better return on their money. The move promises to go into markets that have got better returns. So for investors that are already invested there, chances are that you will see better dividends, bigger profits, higher incomes, and so forth. But for those that are yet to buy stocks in HSBC, what it means is that a valuation will increase, therefore the shares for that particular business will increase. So if you're not yet in, this could be a time to go in and buy that stock at a cheaper value, because coming 2025 and beyond, if all goes well, the valuations will increase, and therefore the shares for HSBC will be rated a little bit higher. The same thing applies also for FirstRand investors. If you're invested in a FirstRand bank, you are a shareholder there, or you've just been trading the index on the market and so forth, now could be the best time to enter in, because all the projections are indicating that valuations will increase. Remember, we already say that FirstRand is by far one of the biggest banks in Africa as far as market value is concerned. It means that they've mastered the market, especially the African market, and they are bound to make the best out of the operations that HSBC are selling to them. Another thing that you need to also consider is that with changing political scenario in South Africa with the GNU, it means that market conditions are changing. Whether they're changing for the better or for the worse is yours to find out. However, it seems like FirstRand is saying that they're seeing opportunities in the market, and in order to make the most out of those opportunities, then they're increasing their market presence, their market value, their holdings. Hence the reason to buy HSBC. Okay, lastly, let's look at market impact. Okay, the move suggests that HSBC is a very confident moving forward, especially moving into that Asian market. So as an investor, it means that there is a shift in market. We might be seeing a lot of money moving out of the African market, especially the JSE, and chasing better returns in other avenues. In this case, we're looking at the Asian stock markets. And there are a lot of stock markets. You've got Japanese there, you've got the Chinese stock market, and many others. So it's up to you to find out exactly which market is going to get the most out of such a move, and what will be the implications as far as market growth, as far as market valuations. You need to pay a little bit more attention to the promised returns, and look at the targets. Are they reaching the targets, especially the quarterly targets, moving towards that particular period? Then this will help you to make your decision whether to buy into HSBC or to dump their stocks. Or in other cases, are you going to remain and leave your money in the South African market in such conditions? So there are still a lot of things that will happen, especially in the financial services sector. With such growth and such expectations, you are bound to see opportunities here. But with all these opportunities, don't forget that a lot of risk then will manifest itself. The issue is you need to make sure that you conduct your research clearly and be sure of every decision that you're making, especially if you're buying into FirstRand. Now, what I'll always advise is that make sure that you contact a registered financial services provider. Find out from a registered broker who knows exactly what is happening, the entire dynamics of the whole market, so that you get better information to make your investment decisions. If you got any value from this video, Please don't forget to give the video a thumbs up, a share, and also subscribe if you have not yet subscribed. This is Friday Money Matters. We'll see you next Friday on this channel. Bye.